Our next guest says we're going to finish the year higher than where we are now. Oh, well, what a welcome face to bring on the show this morning. Joel Schulman with Entrepreneur Shares. You still think that?
I still think that. It's a lot easier, by the way, after the October we had. So
yeah,
I still think
true. That's true. Yeah. Okay, you like Facebook.
Sure.
You think it's going up from here, up from 153.
Right. So they've been down 34% from their high to their low. I mean, they were up yesterday. They're up again today with the new earnings announcement. They came in with strong performance in the last earnings call, and I do like them. Sure.
So buy it as a bounce back story.
I think it's got a bounce back. I think all things are pointing to positive results. I mean, they have active users have increased and their earnings are up. They put $9.3 billion year to date in R&D. I mean, this is a company that's been growing R&D by 40% for the last 5 years compounded.
I got to say, Joel, you have not changed your tune. You've said this throughout the last 6 months that you've been on the show. Now, what are you going to say about big tech? Because they've had a dreadful October,
right.
But they are bouncing back right now.
Right. First of all, yes, I do buy them. They were down about 18.2% for the month, which is horrible.
Yeah.
Some have been down 32%, 34% for Facebook and Netflix. I mean, both companies. We've got to remember that we've got 499 ETFs that are moving lockstep with each other. And they've got about $1.8 trillion in management. Now, last year was about $1.34 trillion. So we have about an additional $500 billion that move in lockstep. So when the institutional investors are moving out, they're moving in sync. And when they go back in, they move in sync. So a lot of my response to the markets going higher, if institutional investors go back in, I think things will bounce. Now, we have to remember, the third week of October, they pulled out $10.2 billion, $10.5 billion in 1 week alone. And we saw the markets crash that 1 week. If they go back in, stocks go back up.
So you follow the institutional investors because they have to move in lockstep because they're all in these electronically traded funds.
ETFs have to move. They're passive baskets. So when they move the money into these passive baskets, it goes up without regard to valuation. A lot of people have to recognize things aren't the same as before. So when we see stocks moving up and down after hours, and then we see the next day that they go down with the basket, that's what's going on. After hours, it's primarily retail investors or high net worth. They're moving up with the market or down with the market. Then the next day it's moving with institutions.
That's fascinating.
Wow.
So, look, you've dealt with the market overall, ends the year higher than now. You've dealt with Facebook, buy it. You've dealt with the big techs. You love them, bounce back nicely.
Yeah.
How about General Electric? Not your kind of company,
Well, no, it's not my kind. It's 100-something, 150 years old. I mean, they just moved headquarters a couple blocks from where I live in Seaport in Boston. This is not a company that I buy. Now, they are doing good things in terms of compensation, so I noticed that.
Yeah.
But it's not a company I track. I mean, maybe 120 years ago I might buy them. 110 years ago I might buy them, but not now.
Well, 20 years ago you would have bought them and done very well.
Yeah.
But
so
now it's just $9 a share again.
So when Jack Welch was running, in fact, I did a book previously, Getting Bigger by Growing Smaller, and we tracked all the companies of Fortune 500. There was one company that for 20 quarters consecutively consistently outperformed quarter after quarter. That was GE Jack Welch.
Yeah.
Those days are over.
How about General Motors?
Well, I'm from Detroit. I'm from Detroit.
Look at that, 7%.
So I'm never going to speak poorly of a Detroit-based company, but it's not an entrepreneurial company.
You are speaking poorly of the company. It's not an entrepreneurial company.
Well,
They're toast.
I mean, I'm glad they're doing well. Like to see Detroit do well. Like to see Detroit automakers do well. But it's not an entrepreneurial company, so it's not in my fund.
Yeah,
but good luck to General Motors.
You're the exact opposite of a gentleman who appears on the show frequently, Dennis Gartman.
Okay.
Dennis Gartman wouldn't touch a technology company with a 10-foot pole. He only buys companies which make things that you can drop on your foot and hurt yourself.
Yeah, so on average, we're fine.
You're the other way around, aren't you?
Yeah, we are.
Completely so.
Completely opposite.
All right, you're also a professor, aren't you?
Professor at Babson College.
At Babson. My daughter went to Babson.
That's what I heard.
Yes,
yeah.
She did. She didn't remember you.
Well, if she took my class, she would have remembered my class.
Oh, yes, she would. Joel, you're all right. Thanks for
you.
joining us, sir.
Thank you.
Much obliged to you.